Good afternoon, everyone, and thanks for joining the call. On behalf of B&K Securities, we welcome you all to Indian Bank fourth quarter FY18 post-results conference call. We have with us today the management of Indian Bank, represented by Mr. Qtr4, MD and CEO, Mr. A.S. Rajiv, Executive Director, Mr. Bhattacharya, Executive Director, and other senior officials. I would now request management team to start the call with his opening remarks on fourth quarter FY18 results, post which we can start the Q&A session. Over to you, sir.
Yes, sir. Thank you so much. Sir, our MD is joining in another 5 minutes. I am Rajiv, Executive Director. I am starting the proceedings. The Board of Directors of the bank approved the bank's for the quarter ended March 31st, 2018. Audited results of the full year ended March 31st, 2018 as from today. The major highlights are for the year ended March 31st, 2018. Operating profit is, we have crossed 5,000 crores and it is up by 25%. Net profit at 1,259.99 crores. Net interest margin global is at 2.90, which has grown by 31 basis points on point-to-point basis. Return on average assets, ROA 0.53%. Net interest income grew by 21.72%. That is, net interest income is reached 6,623 crores. 6,263 crores. Non-interest income is at 2,405 crores, grew by 8.79%. Cost-to-income ratio declined by 331 basis points to 42.31 as against 45.62% as on previous corresponding last financial year. Return on equity is at 8.27%. The business parameters are the total balance sheet size grew by 15.80%. That is, we have reached 2,52,716 crores. Total deposit global 2,08,294 crores, which has grown by 14.13%. Domestic CASA deposits up by 14.59. CASA ratio is 37.78%. Current account deposits up by 32%, reached at 12,426 crores, and SB deposit grown by 11.73, reached at 63,977 crores. Advances global grew by 23.14. That is, in number terms, it is 30,581 crores to reach 1,62,726 crores. RAM sector is grew by 18,111 crores. That is 26.12% growth, of which retail is grown by 32.5%, agriculture 25.9%, and MSME 20.9%. While coming to asset quality, gross non-performing assets down by 10 basis points, that is 7.37 point-to-point basis. Net non-performing assets down by 58 basis points, that is 3.81% as against 4.39 March 2017. Provision coverage ratio up by 613 basis points, that is 64.27% as against 58.14% as on March 2017. Trust assets as a percentage of gross advances reduced to 8.65 from 10.74%. Recovery from bad debts improved by 65.98%. As regards capital adequacy, CRR as per Basel III guideline 12.55%, of which CET1 at 11% and AT1 11.33%. Sorry, AT1 is 0.33, total Tier 1 is 11.33, Tier 2 1.22%. Net worth increased by 9.44% to 15,826 crores. Book value per share increased to 329.53 from 301.10. Quarter to quarter, operating profit grew by 8.75. Quarter to quarter, operating profit reached 1,164 crores. Net profit at 131.98 crores. Net interest margin global grew by 14 basis points, reached 2.84%. Return on average assets, ROA 0.21 and return on equity 3.35%. Quarter. Net interest income grew by 18.25, that is 1,637 crores. Non-interest revenue 490 crores and cost to income ratio is 45%. These all figures are quarter Q4 17-18. And as regards the dividend is concerned, the Board of Directors recommended a dividend of 60% for the year ended March 31st, 2018, which is same as the last in the previous year, which is subject to the approval of shareholders at the next annual general meeting. And these are the main financial parameters which we would like to inform you. And comparatively in the present situation, the bank, because of the present situation in the banking sector is facing, we think that the performance is by and large is good, and the corrective measures will be taken in future wherever possible. So these are the main parameters and these are the main highlights. So I think that now we can go ahead with the one-to-one questions, if any of the figures. I think, okay, sir?
Sure, thank you very much. So shall we begin with the question and answer session? We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Siddesh Matre from FCA Securities. Please go ahead.
Yeah. Hello, sir. Can you explain
Mr. Matre, we can barely hear you. Request you to speak a little louder, closer to the phone.
Now is it okay?
Yes.
Yeah. Can you tell me can you just give me a brief idea about what is the tax situation over there for this quarter?
I could not able to get you, sir.
The negative taxation.
Mr. Matre, we are really having trouble hearing you. Request you to use the handset.
Negative taxation that you are talking.
Yes.
Sir, this quarter we have made 1,800 crore credit provisioning we have made. Out of 1,800, 1,100, whatever the eligibility, you know that two sections are there as per Income Tax Act. One is 3617 and 3617A. As per 3617A, we can go for equal to 7.5% of our rural advances. So the remaining part, as per Income Tax Act, we are not eligible for taxation provision. So this we have taken, deferred tax assets is created, and this is the portion is negative taxation as come. So this credit provisioning next year we will claim as an income tax deduction, and this entry will be nullified.
Okay.
Yes.
And why there is a drop on yield on advances? Can you just explain on that?
Yield on advances
or anything else?
Yield on advances is mainly for the current quarter we have made around 80 crore interest reversal because of additional NBS of that February 12 circular. Around 2,800 crore NBS we have recognized for change in from CDR or S4A, that type of accounts. And around 72 crores interest reversal is happened. Another thing is that one of the lowest in case of MCLR was 8.25. Now afterwards we have corrected during the first quarter, it is MCLR is increased to 8.40. So one effect was reduction of MCLR, the other one is interest reversals.
Shipped up. Okay. And can you tell me a brief about your provisions, why they have increased, any particular accounts, any stress on specific sectors? Can you just throw some light on that?
No, there is no sector specifically provisions are not increased. Last year we had around 4,600 crore was there, restructured accounts was there, S4A, CDR and other accounts. From there was a movement of around 2,400 crore is diverted. So this account is classified as NPA and we have made additional provisioning for that. And if you see that revised framework Q4 provisioning, we have made around 504 crores. And migration provision was around 800 crores. And fresh NPA only 175 crores.
Okay.
Total is 782 crores we have made the provision, and some of the accounts little excess we have given because we don't want to reduce the provision coverage ratio from 65.
Okay, so no big account going into NP or something like that?
No, nothing.
The restructured account, the stressed book came into NPA, which was just standard, right? Yeah. Thanks a lot. That's all from my side.
Thank you. Next question is from Anand Ladda from HDFC Mutual Fund. Please go ahead.
Hello.
Yes, sir.
Sir, if you can give some color on our 3,000 crore of slippages this quarter, how much has come from restructured book, SDR, S4A? How much was because of this RBI February 12th circular?
Yes. Is there a base? 2007. Sir, RBI circular told to the 15 accounts, 1,727 crores.
1,000?
727 crores.
Okay. And sir, of this, what part was what was the part from restructured book? How much was from standard restructured book? How much was from SDR, S4A, sir?
All now the scheme is not. 2,400, I think.
Registered 1,482.
$1,500 crore from NBA due to RBI revised guideline of restructured books, sir. 1,482 crores.
Sir, if you can give what is the outstanding standard restructured book now, that's it, sir?
Now standard account 60,000 only.
2017.
Yes, now 2,017 crores.
79.
2,079 crore.
You can give some color like what sectors are this from, 2017 crore?
Which is a 2079 split up.
Sectoral breakup of this.
On and from.
Sorry, yeah.
That is, sir, flexi restructuring 1,100 crore.
1,100 crore.
Yes, for a 100 crore.
Mr. Ladda, we can't really hear you. Request you to please speak with the handset a little louder.
Okay.
Sir, 2079, out of that flexi restructuring 5/25, 1,152 crores.
Okay.
And other restructured general, that is small accounts like housing loan and other things, 700 crores. Is 100 crores. And outside SDR is around 60 crores. This is the total split up.
Okay. So, of this flexi restructuring, what proportion could be power, sir?
Power is first phase.
That is, power is, two accounts is there, around 500 crore is there.
Okay. And these two accounts are operational accounts, sir? Operational and servicing?
Yes. This is standard account, operational and servicing that.
And there is not a single day delay in this account?
No.
Okay. Sir, if you can give some color on our SMA2 book, that will be great.
SMA2 is 4,000 crores.
4,000 crores.
And the SMA1 is around 7,000 crores. Total 8% is coming. 1 and 2.
Totally coming out 8% of the loan book.
Loan book, yes.
Okay, sir. Thank you, sir. That's from my side, sir.
Our MD Sahib is joined, and I will request that MD Sahib will...
Good afternoon, everyone. Sorry, I was actually stuck up with the electronic media, but now I am back with you. Now, please continue with your question answers.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. We have the next question from the line of Naveen Baid from Aditya Birla Capital.
Can you give me a little more color on your slippages? So what was the gross slippages for this particular quarter?
Can I say something to all of you?
Yeah.
Because this is what I am just seeing, that everybody is focusing on Q4. And all of you know it very well. In the banking industry itself, Q4 there were certain events which were unusual events, rather unanticipated events. And that will not have any bearing in so far as bank's overall performance is concerned. It's my personal opinion.
So how can it not have a bearing on bank's performance if you have to provide for the additional recognition that you've done that will eat into the growth capital? So it's not that it is immaterial.
What I'm saying, when you are talking about Q4, you are comparing this Q4 with the last Q4. And then we are commenting on that.
It's not about comparison. If I have to model your future...
Therefore, what I'm saying, as per this event, now whatever has happened, it has come on the fore, right? Now, based on this only, the model will continue. Insofar as our Q4 is concerned, it's only because of the Reserve Bank of India's those new guidelines which has come.
I understand that. That's the reason why I'm wanting the breakup, sir.
Yeah, so that breakup I will give you.
Yeah.
As per that one, the fresh slippages are 2,988 crores.
2,988, okay. And out of this, how much has come from the restructured and the various kind of restructured books?
This is 1,727 is out of this total. Plus, there were divergences which also we have recognized this time itself.
And how much was that amount?
That is around 520 crores.
500. And that had come from the standard book?
Yes, that has come from the standard. So, therefore, this 17 plus this 522, out of that 29 or 30, I will say, 23 has come only out of these two, rather because of RBI divergence and this one. Otherwise, normal slippages are around 700, which is quarter-on-quarter basis we are showing the similar.
Already we have Q1, Q2 we have taken.
Yeah.
And of this 2250 crores of the under these two segments, how much have you provided for so far, cumulatively?
So, out of divergence, in fact, we have provided fully.
Fully, you mean 100%?
No, fully means whatever was required to be provided.
Yeah, okay.
I will give you the figure.
440.
Yeah, so I need a figure for that, 2247.
It was a 440 crore. 520 was divergence. Provision required was 440. We have done already that provision.
Entire amount is provided. And for the RBI 12th February circular, the additional recognition was 1727. For that, how much have you provided so far, cumulatively?
That was 504.
So out of that 1727, only 504 has been provided so far.
Yes, correct. But that much only comes as per the...
Okay, fine. Thank you. Yeah, that's it from my side.
Thank you. Before we take the next question, a reminder once again for our participants that you may press star and 1 to join the question queue. Next question is from Dhaval Gada from Sundaram Mutual Fund. Please go ahead.
Hi, sir. Just a few points. First, I think as Rajiv sir mentioned, the SMA2 number seems to have gone up, from where we were last time. Could you comment, even after, having so much slippage, still the SMA2 number seems to be slightly higher. Any color, any chunkiness that is still left in the portfolio?
There is earlier also, sir, around SMA2, 3,000 to 4,000 crore is a dynamic figure, but it is like that only. On an average, we have seen that when slippage is coming, maximum 12 to 15% of the SMA2 is slipping for the quarter. So that was the reason earlier 600 to 700 crore quarterly basis slippages are happening. So according to us, this is within our control. Actually, this SMA1 as well as SMA2.
Okay. And going forward, sir, would you like to give us slippage guidance for FY19?
Yeah, our slippages, if you see quarter-on-quarter basis, they were on an average around 500. Now, because most of the lumpy accounts are already been recognized, if I say only from the normal operations, even if I keep the same run rate of 500 crores, it will not be more than 2,000 crores on an annual basis.
Okay. Okay. And, the other thing was on margins. So I understand, the interest income reversal had some impact on margins. Going forward, what would be your guidance on margins for FY19?
Now, if you see, we have been talking about our 5-year plan. Based on that 5-year plan, we are supposed to actually have our margins in this current financial more than 3% NIM. Right. Actually, we are well on track. This year itself, we have improved our margin by 31 basis points. Now we have come to 2.90. So by this current FY, certainly we will be actually having about 3% margin. Okay.
And on cost growth, going forward, so this year was, in single digit. So going forward, what would be your expectation on overall cost growth for us? Both wage inflation and normal cost growth. What do you think?
It will be around 10 to 12%. It will be there because the branch expansion will also be there. There will be a overhead cost and rent also. And naturally, it will be in the range of industry 8 to 10%. That is the range of overhead. I am talking of the cost in respect to overhead discount.
Only the operational cost.
Operational cost.
Right. And just lastly, sir, when you took over, sir, you had guided for about 1% ROA and 13 to 14% ROE. Would you still maintain that guidance for FY19, or you think after the events we are maybe deferred on that plan by at least 1 year?
No, we got slight setback in ROA insofar as because of these events, as you rightly said. But going forward, when our bottom lines, which are otherwise also expected to improve because of the recovery this current financial year, we certainly will have ROA much better than what is having today. But 1%, we will again have that target of 1% ROA during the current year, because today we are roughly around 6.6. Right, so 0.53 to be on precise. But definitely it will improve. So we will keep the target of 1% for this current financial year. We will have a relook into that after the first half year, because now major events, we don't anticipate any shocks now from neither from the market nor from the regulator nor from our books. So therefore, the ROA 1% should be achievable. If not in this financial year, certainly the next financial year by before Q2, that is first half year itself, we will achieve that.
Sure. And just last data point, could you give the current position of our IBC cases, not just, so list 1, list 2, and any other bilateral or sole banking cases that we would have referred to IBC?
Yeah, I have it. Just hold on.
List 12.
Yeah, I have. 1 minute. First of all, I will again give the data which is about the first list and second list. In our first list, we have 8 accounts. Total outstanding was 2680. In second list, we had 10 accounts. Total outstanding 828. So therefore, 18 accounts, 3508 was our total in IBC in that account. The provision requirement, particularly for these accounts, is fully met, because provision required was 1,833. As against that, bank has already done 2,467 provision. So insofar as provision is concerned, that's all. Apart from these 2 lists, there were 7 cases filed by our bank, amounting to around 887. 4 cases were filed by corporate debtors, amounting to 439 crores. Another 7 cases were filed by other banks, where other banks are leaders. These are outside the RBI list, 516, and there are 5 cases in our books wherein the operational creditors have filed the NCLT cases. So, we have NCLT book roughly around 41 cases, amounting to 5,481 crores. Now, most of the accounts are now have started reaching. In fact, RBI list 1 itself, you must have seen 5 accounts. We are expecting that this year we will get recovery. In list 2, there is 1 account which is almost reached to resolution. The 2 cases which are filed by us, we are reaching the resolution. So in these accounts, 9 accounts, we are expecting roughly around 1,000 crore of recovery coming from these accounts.
Sure. And on the power sector, the 2,525 that are, still in the restructured book, they are, what would be the credit rating of those 2 projects, if you could highlight?
We'll just draw it and come back.
Sure, sir. No problem. Thank you and all the best. Thanks.
Thank you. Next question is from Nilang Mehta from HSBC Global Asset Management. Please go ahead.
Yeah, thank you. Thank you, sir, for taking my question. It was again related to non-performing loans. You guided around 2,000 crores of slippage fresh for FY19, but which is like the new slippage. But do you expect part of your restructured book, which is standing balance restructured book, is around 2,100 crores, that also to slip in next year?
No, because those are performing assets actually. Last year, if you see, it was more than 4,000 our standard restructured, and out of that, accounts are already recognized. Only this 2,000 crore only whatever is remain, that is 2,079 crore. Those are all performing accounts. We don't foresee any of accounts slipping in this year.
Sure. And sir, out of your total power sector exposure, 52 billion is on private sector, and around 23 billion out of that is already become NPA. So the balance 2,000 crores is something. Does it overlap with this restructured book, or it is?
Power sector, yes, you are right. 58% is from the government sector.
Yeah. On the private sector, sir, which is around 5,200 crores of exposure, out of which 2,300 is already NPA. So we have another 2,000 crores. That balance 2,000 crores overlaps with the restructured, balance restructured, standard restructured, you are saying? So that is?
Yes, there is a possibility of that. We'll have to actually segregate this data and then come back to you.
Sure. And sir, while you have guided for, NIMs this year and ROAs, are you also looking what kind of net NPAs we should be targeting in next year and year after that? And how do you look to achieve that?
Yeah, sure. In fact, our target still continues to bring down the net NPAs less than 3%. We would have achieved close to 3% this year itself, but for that RBI new guidelines. So 3%, less than 3% target we are having for this current year, and gross NPA today, which is 7.37, we will like to bring it down to closer to 6%.
By March 19?
Yes, this financial year.
Okay. Sure. And sir, can you give some update on wage revision and likely provision we have been making on that account?
Actually, 13 crores per month from November onwards we are making it. So this is taking care of the assessment as per our assessment of wage revision, which is in the line. 13 crores onwards from the November month we are taking. It is due from 2017 November, and according to the provision has been made.
Okay, thank you. And sir, one last question was related to, this whole letter of comfort kind of controversy which erupted in Punjab National Bank. What is the update from our bank in terms of, processes, systems, any reviews which you guys would have done, any findings from that if you can share?
Actually, 38.4, the RBI has already given the interface of the SWIFT with the CBS that has been put in place. And as far as the letter of comfort is concerned, we are in handle on that. We have no exposure in that PNB at all.
Okay. So now, you're saying that it's all on your core banking system.
It is interfaced with the core bank. In fact, we have done it to be 15 days ahead of the RBI target, actually.
Okay. Thank you, sir.
Thank you. Next question is from Amit Rane from Quantum Securities. Please go ahead.
Hello, thank you for the opportunity. My question is on credit growth. What kind of credit growth are you expecting this year?
See, this year we have achieved credit growth of around 23.5, 24%. But if you look at it here, from which segment it has come, it is all come from the RAM segment. Most of it. RAM segment is grown by close to 27%, within which retail has grown by 32%, agriculture by 26%, MSME by close to 21%. And this focus will continue. As I said earlier, the composition of the business composition itself has changed. Non-corporate earlier it was 51%, it is now improved to 58%. And corporate is actually gone down from 49 to 42%. Our endeavor is to make it 60-40 during this current financial year. What we are expecting that this current financial year also, we will be having credit growth of roughly around 20%. And out of which most of it will come from the RAM sector. So with the 20% growth, we will be having a good amount of income also, as well as good credit growth.
Okay. Sir, other question is on treasury. Till what level of GSEC yields will not have MTN from current level?
Up to 7.60.
Okay.
Yes.
And sir, we have 41 cases in NCLT, which is amounting to 5,481 crore. Now, let's assume that 20% we get some resolution. How much will be the incremental provision required for this 5481 in FY19?
It is fully NCLT fully provided.
But there will be some incremental provisioning after the passage of time, right? Of, let's say, 1 year.
That 100% unsecured and 40% for secured we have already provided. And the remaining, we feel like that the recovery will come.
Okay.
Yes.
So for FY18, our provision number was, total provisions were around 3,900 crore. In FY19, where do you see this number based on your assessment?
See, FY18 it was 5,600, right? As against 3,900 crore. In the current year, because there will not be much pressure on the provisioning, we don't expect much slippages in the current year. Actually, what we are saying, that 2,000 crore, that also we are taking it on a higher level, considering that if there are 1 or 2 lumpy accounts, which we have it. Otherwise, we can safely say that we will go back to our March 17 level or much lesser than that.
Okay. Thank you, sir. Hello. Yeah, I'm done with my question.
Okay, thank you so much.
Thank you. Next, we have a follow-up question from the line of Nilang Mehta from HSBC Global Asset Management. Please go ahead.
Yes, Nilang.
Mr. Nilang, you press star and 1 for your question. Your line is on talk. Please go ahead with the question. There seems to be no response from the line of Nilang Mehta. We'll move to the next question.
Follow-on question.
Next, we have a question from the line of Dhaval Gada from Sundaram Mutual Fund.
Yeah, sir, thanks. So just wanted to clarify, you mentioned 6% gross NPA by March 19 is your target. I just wanted to check, is it including resolutions from the IBC cases or Have you factored that into the numbers?
Those factors we are not numbered easily in that, but what happens that fresh slippages will not be there. As I said, there is going to be recovery from all other accounts also. There also, 2-3 things are there. One is write-offs, 2 is ARC sale, because of which our portfolio will go down, and 3, there is an incremental growth in our credit portfolio. So therefore, there is a reduction. If there are NCLT cases which are getting resolved and getting written up from our books, obviously that also will help us in bringing down the gross NPA position.
Okay. Okay, and just last data point, what is the stock of security receipts outstanding?
2,600 crores. Provision made.
And the provision against that?
It is there. I will tell you.
1,800 is provision. That the figure we will give you, Krishna.
Okay. Yeah, no problem. And okay, and sir, were you able to find the rating of the 2 525 power assets which are part of our restructured book? Just, or if you could just qualitatively say, are they were they ever in the SMA book in the last 1 year or something? Some color on that part.
Which are these accounts?
They're all performing. Rating
No, he's asking for the credit rating.
Credit rating. You have
credit from the department.
Standard asset we have already told. He's asking for the rating.
So just to get comfort on those 2 assets, just nothing else.
500.
This rating we will provide you, sir.
No problem, sir. No problem. Okay. Thank you so much. Yeah.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. Next, we have Sangam Iyer from Shubham Ventures.
Yeah. Hello?
Yes, please.
Yeah, sir, I just missed the early part of your statement. So could you just give me the, the detail of the total stress asset that's still pending in the books currently?
2017. It's 2,079 crores.
That's the restructured book outstanding, no?
What is tested is 14,069.
14,069.
Our stress percentage has come down from 10.74 to 8.65. Right. Come down by 2.09% during the year.
Okay. How much was this at the end of the last quarter, sir?
Quarter-wise breakup right now we don't have. We will come back to you, sir.
Okay. And, sir, if I'm not wrong, you said that your overall credit cost that you're expecting for the next financial year should be closer to around 2,000 odd crores.
Yes,
roughly it will come, sir, like that.
Roughly around 2,000 odd crores. Okay. This is for the NP provisioning, you're saying?
NP provisioning, yes.
Got it. Okay. Great, sir. Thank you very much.
Thank you. Next question is from Hiten Jain from Invesco. Please go ahead.
Yeah. I just want to confirm, what is the number you said for security receipt?
2,600 crores, yes, sir.
All right. Okay. Thanks. That's it from my side.
Thank you.
Sir.
That was the last question. I would now like to hand the conference back to the management for any closing comments.
Okay, great. Thank you so much, all of you, for having been with us for the entire year. You must have seen the bank has actually on operational side, operational efficiencies increased a lot. We have been able to control our asset quality also very well. We have shown a good growth in our business. Business-wise also, on all parameters, we have shown good growth. So this being our first year of our 5-year financial year plan, this has really been a successful for us. But for certain events, our asset quality would have been much better, rather the numbers would have been much better. But we are along with the banking industry, but within that banking industry results also, if we see, when we compare with all other banks, I'm sure these results you will find are much better and well within our control. In the current financial year, when we already began, I'm quite sure the hiccups or the turbulences which we had seen last year, it was really a challenging time. Those will not be in this year, and very smoothly we will be in a position to complete our this particular financial year. In this financial year, you will see Indian Bank strengths emerging quarter-on-quarter basis, and we will obviously be sharing with you all of that. And going ahead, as you say, all of you know, we will be also having our plans as per the approvals given by our shareholders for raising up 7,000 crores. That's, of course, the outer limit. But within that, as and when we are ready, we will share those plans with you. So thank you so much for covering us, and we hope that you will pick up good points also out of entire our performance during the last financial year. Thank you so much.
Thank you, sir. So, on behalf of Batliwala and Karani Securities, we thank Indian Bank management for giving us the opportunity to host the call.